You're watching a very special edition of The Big Question, and today we're talking about what the entire market is wondering. Is June 3rd going to be even more crucial than June 4th for the markets? Now, why am I talking about June 3rd? Exit polls will come out on the evening of June 1st. That's when the last of the 7 phases of polls in this general election season also ends. June 3rd will be the first day the markets get to respond. We're going to now put across for you 2 or 3 sets of data. One, how markets have responded to exit polls versus counting day in the past, and the difference between polls and the actual results. Let's go back to 2009. So we've picked the last 3 general elections. On the day of the exit polls in 2009, or the first day that the market got to react post-exit polls, the Nifty was down about 1.25%. But on the day of the results, the Nifty was up nearly 18%. This was one of those, red letter days for the markets. Now, if you wonder what was happening, remember it was UPA 2 that came into power in 2009, and the exit polls largely showed a hung house. Now, for the market, this is the worst possible scenario, close to a nightmare where there's no clear government. But when the results were out in 2009, it was very clear that you would have a government with the UPA coming back under the halfway mark as an alliance, but with enough support from other parties to form a stable government. And this is what the markets cheered on the day of counting. Now let's go to 2014, another very interesting election, and in fact politically a turning point for Indian politics. On the day of exit polls, markets up a little over 2%. On the day of the result, a little up over 1%. Now, what happened in those exit polls? Remember, this was the first sort of presentation of Narendra Modi as prime ministerial candidate, and most polls did show NDA in the lead, although not above 300 if you take an average of all of them. That was cheered by the markets. You'd have a clear government. What happened eventually was beyond what polls were projecting. At 336 for the NDA, it was unthought of at that point. The UPA under 100. The markets were happy, but just about 1% up because the news had been priced in. Let me come to 2019 as well, where you see a similar pattern. On the day of the exit polls, nearly 4% up. For the Nifty, on the day of the result, you see the Nifty in the red only by 0.69. Now, what were the polls telling you at that point? They were telling you that NDA would have a clear lead, pretty decent numbers. But if you look at the poll of polls, overall, it actually underestimated what the final result is. So let me come to the result. In 2019, where you had the NDA 353, the BJP by itself over 300 seats, and the UPA still struggling to reach the 100-seat mark. The markets were done reacting by the day of the results. So which is why, if we come to the conclusion of all of this, you will see that in 2014 and 2019, markets reacted more exuberantly on the day of exit polls rather than on counting day. In fact, in 2019, one could say there was a sell on new strategy, which is why we're saying that June 3rd may end up being even more exciting than June 4th from a market's perspective, unless, of course, there is a huge variance between exit polls and the actual results.